Hey guys, hope you all are doing really well. We are getting started with the second session of Management Accounting Revision. Okay, so in these sessions, we are going to cover absorption, marginal costing, and we are also going to cover the different techniques of costing in this particular session. So make sure that you watch it till the end. Those who are giving their examination for management accounting nearby soon, this session is for you. And also a quick announcement about the business and technology batch, which is starting today. Today, the business and technology batch is starting. So if you are interested to join into our classes, then you can do that too. And just to tell you that this is going to be a revision session. Okay, this is a revision session. So I'll be hovering around the topics. I'll be talking about where it can be used and how it can be coming in the examination. I'll not be going into the in-depth explanation and problem solving of these particular chapters. Here is kind of a brush up. So those who have already taken coaching, like from me or elsewhere, or going to give your examination anytime soon, then this session is going to be highly useful for you. And if suppose you have not at all started coaching, and you have not yet started learning also management accounting, then this is going to be a bit challenging. You will think that it's too fast and stuff. So if you are watching it, watch it with this perception that, okay, let me just get an understanding that what subject it is. Then you can watch it. If you are watching it so that you understand in detail, make notes out of it, then it won't be helpful for you if you're listening it for the first time. And those who are doing revision, this is something which is really helpful for you guys. So let me get started by sharing my screen. Here it is, absorption and marginal costing. If you remember, in the last class, we did the cost classification, accounting for material, labor, overhead. We had done it, and I had uploaded that video. If you guys have watched it, then it's good. You are continuing in the series. If you have not, then that's the first session. This is the second session, and we'll be applying this. I also have a board with me today. So if I feel like there is something which is important to be explained over the board in the old school manner, then I'll do that too. If that's adding value to you guys, then anything I'm ready to do that. So let's get started with absorption and marginal costing. Now, in this costing, what are we doing here? See, we are actually costing a product. A product, maybe suppose this is a marker. This is a product, and we have to cost this particular product. On what basis should we use our costing means? What all costs should I take? So, for example, I want you guys to understand this, that in absorption costing and marginal costing, both these costing methods are traditional based costing. These are not the modern based costing system. These are traditional based costing system based on which you would find out the cost of the product. So let's just jump forward here. If you just look into here, that absorption costing assigns both fixed. If you guys know what is fixed variable, then you will be able to understand this also. In absorption costing, you will be taking the complete cost of the product. Now, let me just explain this to you guys. I hope that you guys will be able to understand that. Is you would be having one cost called product cost, and next will be your period cost. Now, product cost is something which you can say which is directly attributable to the product. Directly attributable to the product, that is your product cost, which is inventoriable cost. What it is? Inventoriable cost. Now, in this product cost, how are you treating these different types of cost? Either you take it under product cost or period cost. That's the question. Further, you have two different methods. What are those different methods? One is absorption costing, another one is marginal costing. Now, in here, what you would do in absorption costing and marginal costing, for the product cost, you will be taking under absorption costing, you will be taking your variable cost, and also you will be taking your fixed cost. Now, fixed which cost? Fixed production cost. Fixed production cost, variable production cost, you will be taking under your product cost in the absorption costing. Whereas what will you be taking in the fixed cost is non production costs. The costs which are non-production. Now, what are non-production costs? Selling cost, distribution cost, marketing cost. These all costs will be coming under non-production cost. So those costs you will take under period cost. Now coming up towards marginal costing. Now marginal costing is also called variable costing. So what you do under product cost is your inventoriable cost. Matlab ki if I have to record this particular marker in my balance sheet, at what cost will I record it? That is inventoriable cost. I will be taking my variable cost only here. Variable production cost only I'll be taking here. I will not be taking anything else in here. And then my production fixed cost, my non-production cost, all these type of cost I'll be taking under my period cost. I'll not be taking it under my product cost. And this marginal costing, I'll be using it for my own internal purposes. I'll not use it for external purposes, balance sheet reporting, I'll not use it. I'll use this particular costing, absorption costing, for my balance sheet purposes or reporting it to outsiders. I'll be using absorption costing. Now, this is just with the treatment of these cost and inventoriable cost, whether you take a product cost, period cost, what all you take. Now, here comes a slight confusion. When I'm calculating my contribution, what should I do? I want you guys to listen it here carefully. If you listen to this carefully, then complete absorption marginal costing, you'll not find any difficulty. Now coming up towards another thing. Normally, what is contribution? Now contribution is nothing but sales minus variable cost. Sales minus variable cost is your contribution. Now the question is, if you are calculating your contribution based on absorption costing, you are calculating your contribution. What will you do on this variable cost? You'll take this stuff. Okay, now the main difference which arises is here. In your variable cost, here in marginal costing, what will you be doing? Now, variable cost and marginal costing, what will you do is, under this, to find out the contribution, what all things will be coming under variable cost is your production variable cost and also your non-production variable cost. These two will come while you are calculating your total variable cost under marginal costing, and that's for your contribution calculation. I hope you guys are getting the difference between the two. Here we are just talking about product cost, period cost. Fine. The next thing we wanted to calculate is finding out contribution. Now finding out contribution, what did we do? How do we take this variable cost? Now variable cost, if we are taking the absorption costing, we'll just take this variable costing here. Whereas when you're doing this marginal costing, you're taking your production variable cost. You're also taking some portion of your non-production variable cost. That is also taken into consideration to calculate your contribution. I hope you guys are getting it. And if suppose you have any doubt, you can put it down in the comment section below. Let's get back towards the material and let me just share it back towards with you. Yeah, I hope that you guys are able to see it here. Now, introduction, absorption costing, a science fixed, variable and stuff. They are giving some introduction, which I've already talked about. Also see this in here, the major difference is treatment of fixed cost. This is the major difference. What's the major difference between the two is treatment of fixed cost. Remember this, you can get it in MCQ questions. The major difference between the two is treatment of the fixed cost. Now you see in contribution cost concept, sales minus all variable cost. That's what they're saying, all variable cost, whether it is production variable cost or non-production variable cost. You have to minus all variable cost. Now moving forward, if you just see here, there's an illustration about it. What you're doing in here, marginal cost of production, contribution, you see. If I'm doing it for these amounts, total profit, contribution per unit, profit per unit. That's fine. Fixed costs have been estimated to 120,000 based on production of 1,000 labs. That will remain the same. Profit per unit is 80. So it's something which I've just explained it over the board. That's what it is, explaining it in an example format. So let me move forward towards the next concepts in here. So there's a short test understanding, calculating the total contribution margin earned during the period, calculate total profit or loss. See, understand this total contribution is contribution per unit into sales volume. Contribution per unit, how do you find out? You take your sales minus all variable cost. And how you find out your profit is total contribution minus your fixed cost. You get your total profit. And that's what they said. Calculate total contribution and also calculate total profit or loss. Now that's with the marginal costing, variable costing also they call it. Now coming up towards absorption costing, what you do in here. Now absorption costing, you will take all the costs taken into consideration. If you just see in here, to calculate production cost per unit, budgeted cost divided by the calculation values, absorption costing values each unit of inventory at the cost incurred to produce the unit. This includes an amount added to the cost of each unit to represent the production overheads incurred by that product. The total amount added to each unit is based on the estimate that made at the start of the period. So you take all the cost in here in absorption costing. In marginal costing, variable cost. Now, inventory valuation and profit determination. Product cost, period cost. Product cost, period cost. If you have this difference in your head, then these problems will be really, really easy. Now, inventory values will therefore be different at the beginning and the end of the period of the marginal and absorption cost. Okay, let me just share with you one more thing. If suppose you don't have any opening and closing inventory, suppose you don't have any opening and closing inventory, whatever you purchase, whatever you sell, that's all. Then what will happen is you will not have any difference between absorption costing and marginal costing. Why? Because those costs will be coming into consideration. See, this product cost, here will be a difference. Now here will be a difference because of this product cost. This product cost is your inventoriable cost. Your inventoriable cost, if it is changing, absorption costing is giving one, marginal costing is giving one, there's a change between the two, then there will be changes between these two methods. Most of the times, if there's no opening closing inventory, there's no difference between whatever costing method you apply. There's no water. I'll get it after some time. So absorption costing, statement of profit or loss, if you just see, sales minus cost of sales. Now cost of sales, you see variable cost, fixed production cost, inventory, closing inventory, you minus anyhow. And then you get to know what is your under or over absorption, your gross profits, less your non-production cost. Now understand this in here, what you are doing. Your sales minus your cost of sales. Now cost of sales, what all you're taking? Opening inventory, variable opening inventory, variable cost of production, fixed overhead absorbed, that's fine. Less the closing inventory so that you can remove the effect of the inventory which you are having. And then at the end, when you have the gross profit, you can find out the difference, whether it is in plus or minus, that your overheads is either over absorbed or under absorbed. Now under or over absorption, if suppose it is under absorbed, it's a loss. If it is over absorbed, it's kind of a profit situation, or it gets into a plus situation if you just see in here. So it's not a profit or loss kind of a thing, but how much it affects your profit or loss matters. Then over under absorption cost, nothing as such. Then you see in here what you're doing to find out your contribution. Other variable cost is also taken into consideration. And fixed cost goes after contribution, not before it. Then you get your profit and loss. So you need to know these two statements. And to know these two statements, if you know this stuff, then it will be more than enough for you. At this point, at this level of education, it will be fine. But understanding this is only a major work for you. Now, impact of inventory on profit. Now, suppose if you are having inventory, sometimes when you're recording it based on absorption costing, if you have more inventory which you have recorded, then what will happen? Your profit will go up. Now, how is your profit going to go up? How is your profit going to go up when you are recording based on absorption costing? Now, understand this. Absorption costing means you are recording all your product cost in the inventoriable cost. So your fixed cost, everything is recorded in there. Now, when that's recorded in there, what will happen is just look into this. Suppose this is your inventory. Okay, inventory account. Now, in the inventory account, what happens? I hope you guys are able to look into this. In this inventory account, okay, I need to stop sharing, right? Yeah. Suppose this is my inventory account, and in my inventory account, I have my closing balance here. Now, my closing balance is actually up because I'm recording it on absorption costing. Now, on absorption costing, when I'm recording it, my closing inventory value has gone up. Now, when my closing inventory value has gone up, my gross profit here, okay, my gross profit here will automatically go up. Why? Because my closing inventory has risen, means my gross profit will also rise. Now, if I just take that, if I remove this inventory and say profit or loss account, closing stock went up, automatically gross profit will go up. And it will be showing an abnormal amount in there. But that's something which is normal, and on a regular basis you record it. Now, moving forward, I hope that these stuff you will be able to do it. You can practice it further. Let me see if there's anything to be. Now, reconciling profits reported under these different methods. Now, what are these different methods? Absorption costing, marginal costing. If you are reporting from this method to that method, what will be the reconciling factor? Reconciling factor is your what? In big terms, I'm saying you is your fixed cost and nothing else. Your fixed cost will play a major role in here. Your fixed cost is going to play a major role in here if you want to calculate this stuff out there. Okay, so if you just see here, if you are finding out the profits, marginal cost, you're taking 582. Absorption costing, what you're doing, 58255, because that's your fixed production cost. And then there will be the difference. Now, in that difference, what you'll do, you'll see this production and sales. Production is 2000, sales is 1500. What is your closing stock? 500. Now, 500 is your closing stock. If your closing stock is the main picture for the difference between the two, then 500 into 5, that should be actually your answer. If you just see here, yeah, 500 into 5, 2500. I hope you guys are getting it. The difference between the two is majorly your fixed cost. Then then again it goes further. If you just see in here, see again 2500. So there's an explanation for them, but I have explained you in another way. They have also done it almost in the same manner only, but the difference between absorption costing and marginal costing is treatment of fixed cost. And treatment of fixed cost will come into picture when you are having inventory. Inventory is your closing stock. If you're not having any closing stock, then marginal costing or variable cost, marginal costing or absorption costing, both will give you a same answer itself. There won't be any major change in it. So if you just see here, absorption costing profit 18,750, and here is 2,500, which is the difference 500 into 5. Okay, now advantages of absorption and marginal costing. If you just see in here, absorption costing is used for regular external reporting purposes, whereas marginal costing is used only for your internal reporting. Absorption costing is going to give you an overall picture, but it does not give you what the actual cash you are having, actual profit. I don't think so you'll be able to understand, because fixed costs are also taken into consideration. Whereas with marginal costing, you'll have your actual nearby to your actuals, and so that you can improve over it. Okay, so we are done with absorption costing and marginal costing. There are a few questions in there. If you can do your exam kit, it would be much better for you. Let's move forward towards the next chapter, where we will be learning about job, batch, and process costing. So let us get started. Just give me a moment.